Welcome, Mr. Denome. In this video, I will explain how Michael Saylor is rug pulling the investors. And I know I sound alarmist right now, and I understand that many people want to defend Michael Saylor. They think he is a Jesus and he is right about everything. And probably I might be wrong here as well, but I'm gonna lay out my case. And I hope that you at least watch until the end of the video to determine if I'm an idiot or not. And if I am an idiot, please tell me how I am an idiot, because I might be wrong in my thesis and I would like to know why and how as well. But let me lay out the case how Michael Saylor is now rug pulling the investors, because there was a big change just 2 days ago. But before I start explaining what's going on, make sure to watch my previous videos as well, where I made detailed explanations what is the plan of MicroStrategy, and also what are the new investment vehicles that they introduced 4 months ago, and since then they introduced a couple of other ones. But watch these videos to really understand the business plan of MicroStrategy. It will basically be the bedrock for this video here, because in both of these videos I basically said that this is essentially a Ponzi scheme, and eventually it will run out of steam, and that can cause a doom loop where we will enter into a bear market. And looks to me that that's basically where we are headed in this bull market as well. So these treasury companies have caused a bull market, but they will also cause us the bear market. Anyway, let me share with you the update that happened. So on August 18th, we saw the usual update coming from Michael Saylor, where he announced that they have bought $51 million worth of Bitcoin into their treasury. Great. The week before this, they also announced about $50 million worth of inflows into their treasury. Nice. The week before that, it was $0 into their treasury. The week before, they announced a purchase of $2 billion. So $50 million is a lot less than what we have previously seen, because previously we saw $2 billion, even $4 billion was 1 week. So $50 million is basically peanuts. And to combat this, they made a big change in their policy of how they sell the shares, how they dilute the shareholders, and how they basically plan to buy more Bitcoin with this announcement. So the change here is that now below something called 2.5x multiple to net asset value, strategy will tactically issue more shares to essentially just buy Bitcoin. And before this, they made an announcement 2 weeks ago, and I scroll down here. So 2 weeks ago, they specifically made a announcement here, an update, that they will not issue new shares to sell and buy Bitcoin under 2.5x mNAV. Now they updated that they plan to actually dilute the shares even more and buy Bitcoin with the capital. So this was the big change, and a lot of people in the comments here are not happy with the change. I've been a holder of MSTR since August 2022. As 2020, I've been holding between bears and bull markets and all these things, and now I will be taking some profit. And here is Michael Saylor with the Pinocchio nose, basically implying that he was lying. And then people are asking, how will this maximize share price of MSTR? People are complaining about the new guidance. Someone is referencing Darth Vader. I'm altering the deal. Pray I don't alter it any further. And then some people are defending, some people are not too happy about the change, and all these things. So that why people don't like it is because he changed his ruling. So here is, for example, Josh Mann, who sold MSTR at 1.5 mNAV. And the reason why he sold is because a man is only as good as his words. They issued a guidance, and then they violated that guidance just a couple weeks later. So the investors no longer know what is true with the MicroStrategy stock and what is not true, because they keep flip-flopping. They create new investment vehicles all the time, and now they keep changing the rules all the time. But what is continuing to happen is the dilution of the shareholders. So when we take a look at the price of the stock itself, it has been an absolute success story. So from the lows of 2022 and 2023, the stock went up 4,000%. And even now it is sitting at 2,500% above its bear market low. So it has been an absolute success story, but here is where it doesn't show a success anymore. So in November, December 2024, it made an all-time high here. But since then, even though Bitcoin has been breaking all-time highs, MicroStrategy stock has not been breaking new all-time highs. It has underperformed compared to the price of Bitcoin. And this is why the investors are angry. They don't really care anything, like you can dilute the shares as much as you want, but if MicroStrategy stock is not outperforming Bitcoin, then what's the point of having MicroStrategy shares? So for more than 6 months, it has underperformed Bitcoin. And that is the core of this problem. Now, the 2.5x mNAV number that I mentioned before, what does it actually mean? It essentially just means the market cap of the stock compared to the market cap of their Bitcoin treasury size. So the higher the number, basically the more overvalued the stock. And when is somewhere near 4x the multiple of their Bitcoin treasury, then it's easy for them to create new shares because it's basically safe. The stock price is too overvalued, so they create new shares and they buy Bitcoin with the shares that when they were overvalued, basically. But when it gets close to 1, then it gets interesting because then the share price is equal to the size of their treasury. And this is where it starts to become a little bit dangerous even, because they have all of these different debt obligations through the investment vehicles that they have invented. For example, here they list STRD, which is some kind of an investment vehicle, STRK, STRC, STRF. Who knows how many more STRs there will be in the future. But many of these, they have promised a yield on investors who buy these different investment vehicles. And if the stock price goes down, they do not have the they don't have the cash flow to pay these dividends that they have promised in dollar terms. And if the investors no longer want to buy the strategy stock, then they are unable to fulfill their debt obligations and fund the preferred equity dividends that they have promised to the investors. That can lead to a bankruptcy. So the plan here below 2.5x multiple to net asset value is that strategy would still tactically issue the stock to basically pay out the debt obligations and to fund the preferred equity dividends. So the plan basically is here to infinitely dilute the shares and to infinitely gain more investments into the stock. That's basically the game plan here. So it already sounds like a pyramid scheme, and it kind of is, in my opinion. So now that's basically the update there, and people are not happy about it. Now let me explain a little bit how the business works, and just to give you a brief update. I explained it in more detail in the videos I showed you before, so watch those. But the basic idea is that you initially have 100% of the shares. And then what you do is you create 10% more shares on top of the existing share base. You take those shares and you sell them to pension funds. And why do you sell it to pension funds? The answer is that pension funds cannot directly buy Bitcoin. And many of these pension funds have their own obligations to the pensioners where they have to pay a yield to the pensioners. So many or some of these pensions are underwater in their investments. And to climb themselves out of underwater situation, they have to buy risky assets. But the problem is that they are bound by law where they cannot buy risky assets. So MicroStrategy and Michael Saylor, they were a genius and created this pyramid scheme or Ponzi scheme or whatever. So instead of them buying the shares directly to these pension funds, they have created a bond. And these pension funds and some other institutional investors, they can buy bonds. And they call it convertible bonds, which means that you can convert these bonds into shares in 4 years' time. When the stock price has gone up, then you can convert the bond into the share and basically benefit from the difference between the price of the share at the time when you bought this bond and at the time when the price of the stock is $1,000 or some other number that is in the condition of the bond. Now, will the price of the share go to $1,000? It seems unlikely, obviously, but I will get to that later down the line. But this is basically the plan to rescue out the pension funds, and that already sounds like a crazy idea. You're bailing out institutional investors that were already underwater, so it's not a great idea at face value. But all in all, you take these the money from the pension funds, you give them 0% yield, or you sell them these yield investments or whatever, and you buy Bitcoin with the capital, and you deposit the Bitcoin into the treasury, and then you do the same thing again. And now you have 120% share base from the initial amount. You sell it to the pension funds, and then you buy Bitcoin, and you do the same thing over and over and over and over again forever. Now, the obvious question to ask is, will there be infinite amount of capital flowing into this investment vehicle? And in my opinion, the answer is clear, and it is a no. Eventually, the money flows will dry up. And that is the core of the problem, because when money flows dry up, they have to issue new and new vehicles, investment schemes to lure in more and more capital to basically bail out the old investors. And this leads to price stagnation, and price stagnation leads to capitulation eventually. And then the front runners exit, and when there's not enough buyers escaping all of this dilution, then eventually other people sell also, and that leads into a bear market, and there we are. But I will get to that also later. So the answer to the question is, how long can this continue? This can continue for as long as they have operating cash, and as long as they are able to lure in more capital into this system. That is the plan. Now, there are obvious problems here. I already mentioned a couple of them, but let me list them out. The first problem is the new investors always rescue out the old investors. Even if your treasury balance goes up when the price of Bitcoin goes up, you still need more buyers for the MicroStrategy stock. If you don't have investors for the MicroStrategy stock, then the price of the stock doesn't go up. And if people start to smell that this asset will not outperform Bitcoin, then what's the point of investing into that stock? If these pension funds, if the idea is that you either get 0% interest on the convertible bond, or you get like a 2x capital if it reaches a certain price point, but you don't believe that they will ever reach that price point, then who would want to invest into that kind of risk if you know it's going to be 0% anyway, and you're not sure if you will get even that if the company goes bankrupt, and then you are in some kind of a liquidation event. So that's the problem there as well. So new investors always have to buy out the old. And then obviously the second problem is that there is no infinite capital on the planet. Yes, countries continue to issue more and more money, but they will not issue more and more money that will all flow into these treasury companies. And that is, then we come to the next problem, which is that the shareholders continuously get diluted. And they get diluted at worse and worse terms. Like we have seen here, that they announced a new update for the MSTR stock. And there's also a key word here that I didn't talk about before, which is the preferred equity dividends. So all of these investment vehicles, investment tools that they have created, STRD, STRK, STRC, STRF, all of them are called preferred investment vehicles or whatever. And the word preferred means that they get preferential treatment over the MicroStrategy stockholders in the event of bankruptcy. So in the event of bankruptcy, when there's a liquidation event, the people who buy these investment vehicles, they get bailed out first, and the people who hold the MicroStrategy stock, they get bailed out last. This is to attract more capital into their investment vehicles, but that also means that there's less buyers of the MSTR stock because they buy these investment vehicles. And that's basically another risk that the shareholders get, which is kind of like another rug pull on the shareholders. Then they're creating more and more confusing investment products. I made a couple of explanation videos how these investment products work. And right now, if I would explain their whole portfolio, it would take me 2 hours to explain it. And you probably still wouldn't understand it completely. And you would not believe me that they will work that way 1 month from now because they continuously change the rules of the investments. So it's more and more confusing, which means that there's less likely going to be a lot of more capital flowing into MicroStrategy. Next problem is that there's more and more treasury companies now. MicroStrategy is not the only game in town anymore. So all of these treasury companies basically compete for the same capital. They have the same game plan and they compete for the same capital. And right now, when we go to bitcointreasuries.net, there's already 294 different companies, custodians, ETFs, DeFi protocols that essentially offer the same kind of upside risk together with Bitcoin, exposure to Bitcoin, but also the downside risks. So MicroStrategy is no longer the only company that will get these inflows from these risky pension funds into their stock. They're competing with all of these other stock at the same time, which dilutes the inflows into MicroStrategy. Next problem, the original promise was that you can bypass regulation. You have these convertible bonds, and that way you can get access to these risky assets. But this has now been taken off the table because Donald Trump has allowed, with an executive order, for the direct ownership of Bitcoin and crypto assets for pension funds. That means they no longer need exposure to these convertible bonds because they can just buy Bitcoin directly nowadays. So on the other hand, it's good for MicroStrategy that pension funds can buy Bitcoin directly because their treasury value goes up, but it's bad in the fact that they no longer need to buy these convertible bonds from MicroStrategy. And why would they, if basically they are exposed to if the share value of MicroStrategy doesn't track the price of Bitcoin anymore as well in the future. The next problem, like I said before, is that the stagnation of price action leads to capitulation. So as there are these different fears on the market, if the price of MicroStrategies continues to underperform Bitcoin, then more and more people will jump the ship. And if the rules keep changing, the trust that MicroStrategy still enjoys will continue to erode. And as that happens, there's less and less people who want to buy these convertible bonds, and most importantly, buy the MicroStrategy stock that holds it all together. And then finally, we have a doom loop, a self-fulfilling loop. So far, it has been a positive loop, but it can turn into a doom loop if instead of we're seeing investments flowing into MicroStrategy, we start to see money leaving MicroStrategy. That is a reinforcing loop that will basically lead us to the bear market bottoms. And this is not the worst part. The worst part is eventually when the price of MicroStrategy stock continues to trade downwards as they continue to dilute the value of the shareholders. They have all these different debt obligations as well with their investment vehicles that they have sold, where they promise uh, a dollar yield for the investors who buy these different bonds. So they have debt obligations. And like they say here on their plan, is that they issue more shares to pay interest on debt obligations and to fund preferred equity dividends. If there are no buyers for the MicroStrategy stock, they cannot pay out the interest on debt obligations, and people who want the money from those investment vehicles, then they have to sell Bitcoin. And when they have to sell Bitcoin, that's basically the end of the story, because at that moment people will realize that the emperor has no clothes and the game is ended. And that's basically when MicroStrategy will end into liquidation, and then we will see 500,000 Bitcoin that they hold get liquidated on the market. And it doesn't have to be MicroStrategy that fucks this up. It can be any one of these 294 entities that are leveraging their Bitcoin position using other people's money, basically as IOUs. If one of them goes belly up, then the expectation starts to be that all of them go belly up. And that is another self-reinforcing loop. So for now, in the short term, since Michael Saylor has announced that they will continue to issue more MicroStrategy shares and they will buy more Bitcoin, I do expect that he already has buyers lined up for this vehicle here. Otherwise, he wouldn't announce it. So this game of musical chairs might still continue in the short term. But keep in mind that as the terms become worse and worse for the MicroStrategy stockholders, the music in this game of musical chairs becomes quieter and quieter and quieter. So we might see maybe perhaps one more pump to the upside. Like right now, there's the pre-markets for the stock of MicroStrategy. They are currently trading upwards. So we might see move to the upside, but it is unlikely, in my opinion, that this high gets taken out unless we see the US government basically come to the rescue and start acquiring Bitcoin itself. But as of now, in my opinion, this is a highly risky asset. It has had a crazy run up from the lows. And when we take a look at this altcoin market, would you say it has been an organic bull run? In my opinion, it has not been an organic bull run. In an organic bull run, we see new protocols, new solutions, and a lot of adoption of crypto projects. Have we really seen crypto adoption in the last year? In my opinion, the answer is no. We have not seen crypto adoption. We have seen stablecoin adoption. We have seen Bitcoin treasury adoption, which is a gimmicky way of raising capital. We have seen Ethereum treasury adoption, but have we really seen more people using crypto for their daily purchases, for earning yield on their assets, for real world assets being on chain? We haven't seen really real adoption for crypto. On the other hand, we are seeing more and more regulation, especially from the parts of European Union, in regards to what is a who can withdraw capital from exchanges, what is an illegal activity in crypto, who can have a DeFi project, and the taxation regime on crypto is becoming worse and worse also. So it looks to me that we haven't really seen crypto adoption, and crypto also faces a dilution problem, which is that there's now hundreds of millions of crypto projects on the planet, and all of them also compete for the investments. So they the big money is trying to centralize crypto so that you can only use crypto within a sandbox, which is their regulatory framework. And anything outside that regulatory framework, you cannot really use crypto, or you are a criminal. That is the adoption that we're unfortunately seeing. So this crypto bull run has basically only been about these treasury companies. Unless we get real crypto adoption where your friend is like, hey, I want to send you money, and that says, okay, great, send it to my Bitcoin wallet or send it to my crypto wallet. If that starts to happen, then obviously crypto will become a thing. But right now, it's just a gimmicky bull run that we're seeing here. And as long as they still get new money from these pension funds, the game might continue. But I'm seeing massive red flags across the board. So consider yourself warned, but let me know in the comments if you agree with my assessment. Let me know if you think we will still have more hurrahs in the market before more people really realize that actually this cannot go on forever, and then we will enter into the doom loop. But let's see if that plays out or not. As of now, we're still happy and Bitcoin is trading high. So it is what it is. I just made this video. Hope you learned something out of it. And also leave your counter arguments in the comments, because I'm very interested into hearing those. I might become more bullish again after I read your comments. So please leave them in the below as well. Thanks for watching this one. I'll see you guys on the next, and bye bye.